This is The Bottom Line. The Bottom Line on 938 Live.
Now, with the geopolitical tensions between China and Vietnam and the military coup in Thailand, investors may be wary of Asian equity markets. Still, it might be an opportune time to buy or to cherry-pick small-cap stocks, says Manulife Asset Management. Small caps generally refer to companies with a market capitalization of below $2 billion. 938 Live's Travis Teo spoke to Manulife's small-cap specialist Linda Csellak and started by asking how the region's political risks play out for small caps.
Some of those risks have actually affected North Asia companies a little bit more. For instance, in the case of Vietnam, a lot of the textile companies in Taiwan, Hong Kong, China are the ones that have seen their stock prices go down because of the unrest there. In the case of Thailand, I think with this martial law imposed, I think that's the start of something that could eventually be more of a resolution of this political stalemate we've seen for quite a long time. We'll have to see in the coming days, but I think the local investors are starting to get a little more optimistic about there eventually being an end to this.
Are small cap stocks more susceptible to such political risks than large caps?
To the extent they're less liquid and you might have, one seller reacts to it and they sell down the stock, yes. I think more on the liquidity front than anything. But, these stocks bounce back very quickly. Even when we look at, back in 2008 when we saw a general downturn in the small cap market, very steep. These stocks were down 50% or more. In 2009, when things were resolved, they bounced back 100% or more. So you might see a short-term decline, but generally, these stocks do bounce back, and that liquidity does return.
So if we look at Singapore here, what are some of the small caps that have the potential for growth?
Right here in Singapore, when you look at offshore marine, when you look at oil field services, these types of sectors, really playing to Singapore's competitive strengths. I know one of the brokerage houses just raised their forecast for oil. So we continue to see that being a longer-term driver. Companies that are basically doing a lot of the servicing those offshore rigs, we think will benefit. And even companies in our portfolio that are a little more exposed on the Grade A office market, where we think there'll still be relatively tight supply and will benefit from further growth there.
Are you talking about REITs or landlords here?
More the landlords, more in that area. We don't invest too much in the REITs. The REITs tend to be larger cap stocks in a lot of cases.
I see. So smaller developers and smaller landlords.
Yes, exactly.
Linda Csellak there, small cap specialist at Manulife Asset Management, speaking to Travis Teo on The Bottom Line. Now, as always, do note that the stock recommendations and comments presented on 938 Live are solely those of the analysts quoted. They do not represent the opinions of 938 Live on investment decisions.